I think the biggest thing is uncorrelation. You know, when the different pieces of portfolio have to be uncorrelated to each other. So we have to know from a portfolio standpoint, it's going to perform in different market environments, but also the correlation on a day-to-day basis has to be, you know, zero, and we appreciate that. And a lot of times when we're looking at different managers, we'll take the dailies and we'll put them against each other, because a lot of times there's correlation there that's not always seen right away. And I think from a trader standpoint, we understand that a little bit better, because there is, you know, we understand that the oil markets and the S&P market, which might seem completely different markets, actually have high correlation intraday. So you might have a manager who's trading S&P systematically and an oil trader who's discretionary, who on the surface look completely uncorrelated, but actually they're very correlated day to day. We like to see, we want to know that if one guy's going to zig, there's a good chance the other guy's going to zag, you know. But that's a direct correlation inversely. So we also like to see between those guys, and we also want to see the guys who are just completely uncorrelated at all. And when we build a portfolio of CTAs, it kind of is a different subset of each of those. A lot of the discretionary guys are doing very well. A lot of grain traders and programs are doing very well. I think a big function of that is, I think I mentioned earlier that the 90% of the capital is in 15% of the managers. So, you know, it's basically these big, giant, long-term trend followers. Of course, in 08, when we put in these big trends, they all did very well. 09, 010, or I'm sorry, 9 and 10, they kind of floundered a little bit. But that being said, there's a lot of smaller, emerging, and mid-tier managers that are doing very well, actually. Discretionary guys, like I mentioned, some of the oil guys. You know, there's quite a few people put up very good numbers right now. We look at the back office, make sure that's solid back office. The administrator, you know, we check with the NFA, make sure all the compliance is up to date. You know, pretty much the basics of that. And then we get more in, once they approve all those checklists, then we get more into the actual program and the systems, and to make sure that they're kind of, like to look at their dailies and make sure they're doing what they say they're doing. We look at a lot of their you know, margin equity numbers, things like that. To really, it's about risk-return relationships, and that's kind of what we break it down to. I think it's a huge opportunity in the CTA space, and I think people are starting to catch on to it. After 08, you know, they saw how well it held up. And, you know, for me as a manager and allocating to managers, I look at the stock market. If you gave me a program that did 9% return and with 25 to 50% monthly drawdowns, I wouldn't invest in that. But 90% of people's capital is in that market. That's the stock market, you know. So, you know, I just think that there's immense amount of growth for this. And not to mention in 08, we saw the liquidity crisis, and the CTAs didn't have that drawdown, mostly because they don't get their liquidity and their financing from banks. They get it from the exchanges. So there's just huge pluses. I think people are really starting to figure it out and catch on to it, that, you know, these are great asset classes to invest in. I think it's marketing. I think they need to be more organized from some sort of, you know, top-down organization that handles that independently. I know they have the MFA and some other groups, but those have kind of been hijacked, more to, you know, for better words. But it's really about marketing. It's about getting the word out and, you know, educating people about the opportunities and the, you know, the returns that people are getting. We try to market to people locally. I'm in Newport Beach, California, and we try to get that word out, educate them. But then there's just a lot of people that just are interested in the managed futures space, and they find us, you know, through the internet or wherever, and we start dialogue with them. But it's growing. It's growing very quickly.